Hi, grade 12. Today I am going to discuss a question with you based on the consumer. So I'm going to share my screen here so that we can get started quickly. Question says, read the statement below and answer the questions that follow. I just want to get my highlights already. The Reserve Bank's Monetary Policy Committee has voted to cut the repo rate by 25 basis points from 6.5 to 6.25%, reducing the mortgage interest rate from 10% to 9.75%. I've highlighted mortgage interest rate because I think not everyone knows that there's a different word for this. Mortgage rate or the mortgage is also called your home loan or your mortgage bond. So these things are all the same. A mortgage bond is a home loan. Questions here says explain. So I'm going to underline or highlight, explain the term interest rate, and that is for 2 marks. We have to always look at mark allocation because that is an indication of how much we need to write in terms of facts. Then it says analyze how consumers with home loans are affected by the change in the repo rate. Now, they mentioned that the repo rate went down by 25 basis points. So there was a reduction, and they also mentioned there was a reduction in the mortgage interest rate from 10% to 9.75%. So that question counts 4 marks. 2 other things that I think it's important to know. First, what does it mean when we have to analyze? So I've taken a screenshot from your exam guideline for consumers, and it says the candidate has to examine the idea in detail. So you have to tell me in detail what happens when the repo rate changes and how does that affect people with home loans. So you cannot just say people with home loans will pay less. You need to explain to me in detail, but how will they pay less? All right. And show the essence or the structure of the idea. Then another thing that's important is that we need to know what is a repo rate. A repo rate is the interest rate at which banks can borrow money from the South African Reserve Bank. We as consumers pay an interest rate when we borrow money. But when the banks borrow money, they borrow money from the Reserve Bank, and they obviously also have to pay that money back, but they then pay what is called a repo rate. And the interest rate is based on the repo rate. So we know that if the repo rate goes up, interest rates will go up. And if the repo rate goes down, then our interest rates will go down. So those are very important things that we need to know. So first up was the question, explain the term interest rate. When we are explaining, remember, we have to write in full sentences and it has to have a full stop at the end. You cannot answer one-word answers. You cannot answer 1, 2, 3, 4-word answers. It has to be a full sentence. So this is what I'm going to say in my answer here. It is the, let me just get my things here in black. It is the rate at which people who borrow money pay interest for the money they borrowed from lenders. We know that the interest rate is not fixed. And again, I am not typing. We know that the interest rate is not fixed. And may increase or decrease as the demand for money changes. Right. So that question was 2 marks. I am very confident that in my first explanation of what a interest rate is, we would probably get our 2 marks. But if you do know, you can always add to your answer. Just don't waste your time. Right. Then the next question. Our next question was, analyze how consumers with home loans are affected by the change in the repo rate. So now that we know that the repo rate is what the banks pay to the South African Reserve Bank, and we know that that affects the interest rate, we can also answer our question. But once again, it must be focused on how does it affect our home loans. So this is what I'll start to say. When the repo rate decreases, the interest rate, interest rate, the interest rate that consumers pay on their home loans will also decrease. This means that their monthly premium, premium will be lower. Because if the interest rate has gone down, it means that my monthly payment back to the bank is going to go down as well. Then the question was 4 marks. So I started by saying, remember, we have to examine the idea in detail. So we have to say in detail what is going to happen. We cannot say in general. I've now said the repo rate is going to go down. The repo rate going down means interest rates will go down, which means that we will pay less in our monthly premium. I think there's going to be 2 marks for that. So we need 2 more facts on how we are affected by this lowering of the repo rate. So we will then have more money, because if my premium is lower, then that means that I have more money. Consumers will therefore have more money to spend. Now, we know that money that we have to spend is actually called disposable income. So we have more disposable income. You can say it like that as well. Let me just fix that spelling mistake. So consumers will therefore have more money to spend. When we have more money to spend, it actually means that I have more or a higher buying power, because my money has power to buy. So which means that they have an increase in their buying power. I think this is more than enough for those 4 marks. And I want us to just look at the actual marking guidelines to see where we would have received our marks for these questions. Let's just see what's going on here. There we go. All right. So let's look at the marking guidelines. Marking guideline says the following. The term interest rate, it is the rate at which borrowers pay interest for the money that they borrowed from lenders. I am pretty sure that we've mentioned this exactly. It is the rate at which people who borrow money, there's our first mark, the rate at which people who borrow money pay interest for the money that they borrowed from lenders, and that will be our second mark. For the money that they borrowed from lenders. So there we already have 2 marks. We've said more than what we needed to say. We will get the maximum of 2 marks. Now, 262, we said when the repo rate decreases, the interest rate that consumers pay on their home loans will also decrease. Let's see. When the repo rate decreases, the bank or the financial institution decreases the interest rate that's payable on home loans. Or interest rates decreased from 10% to 9.75%, or it decreased by 0.25%. But we said in the beginning, if the repo rate decreases, we said, let me just copy that first tick there. It says in our answer, when the repo rate decreases, the interest rate that consumers pay on their home loans will also decrease. There's our first mark. Then consumers thus pay less interest on their home loan. So our second mark is going to be when we pay less. This means that our monthly premium will be lower. There we go. Consumers will therefore have more money to spend, which means that they have an increase in their buying power. So we will have more disposable income. That means the same as we have more money to spend. So we get tick number 3's mark over here. Consumers will therefore have more money to spend, which means that they have an increase in their buying power, which was tick number 4. That will contribute, it will contribute to an increasing in their buying power. We are saying the same thing, just in a different way. All right. So there is our 2 questions on interest rates, repo rates. I hope that this helps, and I hope that it helps for you to be able to answer an analyze question. Let me know if there's anything specific that I can help with. And yeah, we'll see you in the next one.